What is cracking, lads? We are back with part two out of six of our last week's combine review, where I go over the last 6 days that finally took me from 5,100 to the 5,300 profit target. So let's just dive right in on this day. This was literally the only day I lost out of that last week. I lost 263, and rightfully so. I was not practicing good trading habits. Here are my notes. I was definitely the most brutal on myself this day, and I was glad because if I didn't make those mistakes, if I didn't go through that experience, I would not have locked in the rest of the week to trade how I should be trading. So the first thing I want to show you guys is that obviously we have a No News Monday. That's why I named that the title of the video. Only a 3 o'clock yellow folder, so there's really nothing, and that's not very surprising considering it's after the weekend of the fourth. So let's just hop right on the charts. Let's go to replay. Monday the 4th, or sorry, Monday the 8th. And we're just going to start in the morning, like if I got up in the morning and was charting, like always, right? So we go to the 1 hour, and what we can see here immediately is that, from our last video, we just kept running it up, and it seems to be like our trend is just nonstop, upwards. And when it comes to that, in the past, I was kind of confused because I never seen something like this before where we're just continuously running up continuously, like there's no end to it. And a big part of my recipe hinged on having these different time frame buy side sell sides. But the problem is that can only happen when we have like a big downtrend, right? And then we trend back up, and then when we downtrend again, that's when the new time frame levels are created. So if we're just continuously moving in one trend, we're not getting an opportunity to create multi time frame buy side sell sides. It's pretty much they're all just chasing the same buy side, and the sell side is just always being left behind. So now that it's been a few days, and that I've seen more days of this action, and I got a better feel for it. Now I'm not too scared of it, but I remember during this day I didn't really know what bias to take, during this stuff, because I would just be assuming that any day we could hit a really big retrace and come back down to our sell sides, like for example this one, right? But the thing I want you guys to think about is that if we're trending up super, super strongly, the last thing you want to really be doing is taking shorts, because as soon as the market is ready to pump up again, you are not going to last a second. But on the other hand, if you're trying to find longs and you're finding, a good time to just ride the wave, then you have a much better chance of getting some money and getting in and out in a timely manner. So I'm really going to be charting this real time to like see if I was trading this day again, what trades would I take, what trades would I wouldn't take. And for my bias, I'm definitely going to be looking for longs mainly. If I were to take a short, it would have to be because we are pumping downwards. There's big displacement through, through contested bullish levels that, reinforce the idea that hey, we might be going bearish this day. But if I don't see anything like that, I'm going to be going for long. So I'm going to take a quick minute. I'm going to pause the video, let some action play out till like 10 a.m. Do some charting just so I can save some time, and I'll go over what I see. Okay, so the first thing I want you guys to notice here is that we're still on the 15 minute, and we're looking purely at pre-market action. Like if I woke up at 9 o'clock and I'm just trying to catch up with last night's action, the first thing I'm gonna do is I'm not gonna really care too much about buy side levels, because look, it's already being taken pre-market. I know more are gonna be formed. I can just put that to the side right now. But the one thing I do want to mark is a relevant sell side level, which I say is right here. And the reason why I choose here and not here or here or here is because this one is from Friday afternoon, so that just doesn't count. This one is from Sunday night, that doesn't count to me either. And this one is the closest one I could use, Sunday night as well. But in reality, if you care about the Asia market, the London market, the New York market, in which the Asia is what, like 6 to 3 a.m., and London is 3 to 12, something like that. I don't really care about the market time frames and stuff, because again, I'm following price action. I'm just, I don't care about a particular strategy or moment, or I'm just following price action and trying to do the best I can to make a good bias and make the right trade in the moment I need to. I don't want to wait for a particular time to start considering something. Instead, what I'm doing is noticing, hey, it is coming into the end of the Asia session, which is convenient, But at the same time, this is the last most recent low before we see a clear trend. Because in this time, this is already a different day's action. And then it's kind of downtrending here, but at the same time, you can kind of just see that it's kind of choppy, it's nothing really clear. Once we come into pre-market action here, you can see a clear uptrend. So I'm just going to say this is our sell side level. Okay, so this is the next important moment, which is, when 10 o'clock hits. And this is actually when I took my only AM trade that lost within 12 seconds. I went completely to my stop loss, no chance of getting any profit on that trade. And this is why. So I marked every single fair value gap I saw from market open until 10 o'clock, right? And the only one I didn't see at the time was this bearish fair value gap. So up until that moment, this was what I was able to see. We were uptrending pre-market to immediately start going downwards, right? And so now what I'm thinking of is, okay, I have a high here and I have a low here, right? So what does this mean to me? It means that if I want to see a clear trend, we either need to make higher highs and higher lows or lower highs and lower lows. So first thing we see are some bearish fair value gaps, right? So that's good. That gives us something to work with. Obviously, this one is more important than this one because we want the higher priority ones, the ones where we'll bounce off of. If we're going to come back into discount and be bearish, well, I want to see us, not. I want to see us go into the discount range instead of, because this isn't in discount. You see what I mean? And this is in discount. This is what makes this fair value gap higher priority and what makes it a higher probability of bouncing off if we're in a bearish market. So we see two fair value gaps. This one doesn't really matter because it's going to get disrespected one way or another. And this one actually gets displaced through. So what does that tell me? It tells me that, we don't know what's happening because we thought that we were getting some bearish confluence and then we displaced through it in a bullish manner. So my mistake here is assuming that we made a bullish fair value gap through the bearish. Oh, okay, we can just take a trade using the fair value gap and assume that we're going to make higher highs. That's the problem, is I haven't had any confirmation that this bullish fair value gap is actually going to hold. The same way if I tried trading if I try to trade a short with this bearish fair value gap, well, that's not going to work either because it was never confirmed. So that's exactly why when I took a trade at 10 o'clock here, it just immediately dropped down. And I'm assuming a lot of amateur traders did the exact same thing I did. So what does that tell me? It means, oh, okay, there's no reason to have a bias set. We need to wait. We make a higher high like I wanted, but where's the higher low? It's not there. It's here now. And that's not a higher low. That's actually a lower low. If you're making higher highs and lower lows, you're in a choppy market because there's no trend. There's no clear direction, right? So that's why I took a loss on this trade, and I'm glad I actually walked away until the PM. But there was definitely more mistakes I made later on. But for the rest of the AM session, until 11:30, 12, I want to see if there's any more action that merits me doing a trade. So I'm going to take another pause here real quick. Okay, so for our next significant moment, you can see here that number one, we got rid of the old fair value gaps. We don't want old, outdated, um, invalidated information. That's the right word. So again, we had this fair value gap here that we drew in, gets disrespected. That doesn't even count anymore. And at this point, we've already seen bearish get disrespected, bullish get disrespected, bearish get disrespected again, and yet again we'll have another bullish get disrespected. So there's literally nothing we can. There's no trades to take whatsoever in this moment because everything we are seeing is getting disrespected. But the one thing we can see is that we are starting to head a little lower, right? We have a low here. We're still choppy, right? The range is just narrowing down, but after this here, I'm starting to suspect, we could go a little bit lower, especially with this fair value gap here. Um, if this fair value gap held, that would be a good sign that we have some momentum going downwards. But the only problem is it's a really tough call because you do have a minor fair value gap there and then a bigger one that gets just slightly disrespected. So it's a tough call to make, but with this low not being lower than this one, if this low was just a tiny bit lower, I would absolutely look to take a short here. Just a quick little short, targeting this high, trying to grab this low, maybe just this low, just to be safe, right? This would be a decent trade. You do something like this, right? So you want your 9 points. Here, 27. Oh, that's perfect. See, if this low was just slightly lower, if like because it's not, I still have to assume we're choppy. I still don't really see a lot of fair value gaps getting respected. So this is a risky, lower percentage trade to take, but it's up to you whether you want to take a small risk like this to make some money or not. But personally, I just wouldn't trust it at this point. So, but we do keep it in mind, right? We have some bearish confluence building up at least. And now, once we hit this low, okay, now I can say we're hitting lower highs and we're hitting lower lows, right? So what am I going to look for next? I'm going to look for a new fair value gap. I'm going to look for something else, right? And I'm also going to go back to the higher time frames and see, what does the action look like on higher time frames? And to be honest, it looks really choppy, but you can still see that we're trying to wick lower downward. So there can be an opportunity to get in here on a small trade, right? Because the choppier it looks on higher time frames is the faster your trade needs to be if you don't want to get caught up in that choppiness, right? So as you can see here, as we go down on the time frames, it looks more and more viable for a trade. And that's why it sucks that I don't have the 15-second data this far back, because we could probably see a higher profitability trade in our face with that 15-second time frame. But because we only have the 1 minute, I'm just trying to work with what I have. So again, I'm going to take another pause and see if we get any new data. Okay, so look at this moment now, guys. This is kind of the point I was trying to make earlier in the video when I say, it's better to ride the wave, because we had one singular moment where we could have taken a short and maybe have been successful, but it was risky because there wasn't too much confluence supporting us. And as we were looking for more bearish confluence, we see fair value gap get ran, fair value gap get ran. So I'm still not convinced that we are bearish enough, especially when we're not even taking this sell side level that I placed from the pre-market session, right? So what happens next is we start running it up. And this is what I mean is when you're riding the wave, look how much more efficient that price action is. All of that work going downwards is nothing but a fairy tale now within 10 minutes, right? So we marked here several fair value gaps on our way up. These are now invalid, right? And I don't really care about these anymore either. If anything, these could help us on the inverse if we, find some confluence to work with on that. But for now, we're going to just put those to the side, and we're looking now at this bullish action because we knew from the beginning that bullish action is going to be strong and it's going to give us opportunities to make money. So these are 1 minute fair value gaps. Only one of them got tested. And when I usually see untested fair value gaps, that gives me one sign, and it's retracement. If we retrace, we may be able to bounce off those zones, right? And then here I drew 5 minute fair value gaps because I'm not trying to draw 30 1 minute fair value gaps and having to play a guessing game of which one is the most likely to be bounced off of, right? If anything, this 15-minute fair value gap is going to be the highest probability one if we can find a 5 minute in there, and if we can find the 15-minute fair value gap is the highest probability if we can find a 5 minute fair value gap and a 1 minute fair value gap within it, right? So that's the only reason I'm really going to write the higher time frame ones, because you see now these overlap and it's giving me a little more confidence in that particular fair value gap. So, but what do I want, right? I want a retrace. So after this big pump up, I'm not just going to buy along because I'm shooting for the stars. I'm going to put my Fibonacci retracement and I'm going to look for discount, right? This area is going to be a juicy area for us to bounce off of in. So I don't really care about these fair value gaps, but they're pretty useful to know. And at the same time, we're still looking for SMTs on ES. And so far, we had not seen a single one. And I still don't think we had seen a single one. Because maybe that could count as one, but before this point we have been running up. These are kind of equal highs, so I wouldn't count anything like that. Again, the 5 minute really is going to confirm that for us when it comes to SMT checking. And here you can maybe see that this is pushing higher, but ES is pushing lower. But I like to see more obvious ones, because again, if the market is not making it blatantly clear to you, you probably shouldn't be paying too much attention to it. So now we're back on the longs, right? Now we're looking for a good opportunity, and look at this retracement. It's very, very heavy. And that's probably because this SMT, although small, will guarantee that we could probably push lower to a recent internal low. Not that we're going to go all the way to our sell side level down here, but that maybe we're going to hit, because this is just within a few minutes, right? Because this is 11:23 to 11:33. That's a 10-minute SMT. So basically, I'm not going to be looking for it to take an internal low much lower than, what's in discount. So that's good news for me because that means I can maybe get in on a retracement and put in a long. So let's see what happens here, right? So number one, this gets held. So that's very strong, right? They didn't even go at 25% downwards, right? We're immediately bouncing up. Okay, we're getting a little choppy, right? A little bit choppy. That's not bad news for me. What else do we see? So I'm waiting for this to be touched. This one is confirmed. There's not much else I can do at the moment except go to the higher time frames and try to, parse what's going on. And what I see on the 15 minute is like, okay, we have a low, we're reaching higher. We have yet to see our low that we make. And then on the 5 minute, same thing. We have our low, a high. We need to see a higher low, right? So we're just going to keep waiting. And guess what? We do wait a lot, but look at the time. Now it's getting into 12 o'clock, and this tells me I don't think we're in the right time frame to make a trade because the action is choppy for a reason, right? People are starting to go off to lunch, and the price action is going to do what it needs to do, and it may not do it in a way that we like. That's going to give us a high probability trade. So this is when I step away and I make a good decision by coming back later in power hour to see if there's a good trade to still make. So although this does bounce off our 15 minute like we want, maybe it won't, maybe it will, it doesn't matter. We're going to come back at 1:30, 2 o'clock, and we're going to see what's happened. All right, guys, before we even get to 2 o'clock, there's so much here that is available to see. And the very first thing I want you guys to see is that that SMT, which I thought was a little questionable, it did extend a little more. So it does support that, that downward spike into retracement. And if you guys like trading retracements, you could have put a short, somewhere like right here, or especially this fair value gap if it touched into it, but it didn't even touch into it. If you're a riskier trader, you could have put, you know, you could have even set your trade up here, and had your risk up here because you're so confident in your SMT work. If anything, like this is probably better, more realistic. But again, like as you can see here, it's a hard one to. It's hard to just perfect this kind of retracement trade because it's easier to just trade with the trend. Like trading retracements, you don't know exactly where to put your take profit. Your stop loss could be blasted through, just like this fair value gap was held. This fair value gap could have been held, and it could have blasted upwards again. So this is why I don't trade these retracements. But the SMTs do give me that much confidence in doing a short term trade in the other direction if I really want to. But again, it's 12 o'clock, it's lunch hour. I'm not starving, right? So I don't need to do anything like that. But it does give me good confidence that we're going to retrace, right? So again, this fair value gap that held once, not held anymore, doesn't really matter. This one could have been held, but it wasn't, so that's a good thing. We have some new fair value gaps here. And just like I predicted with the 15-minute fair value gap, it bounces off exactly in that zone within that 1 minute fair value gap as well. So it is as beautiful as it gets. There's even a 5 minute fair value gap here, but it's really not important because again, it's just about getting that precise 1 minute fair value gap to be valid. And it really was. And at the same time, there was an SMT here. So if I were to take a trade, it would not be this retracement at all. It would be this SMT right here. If I saw this, I would, if this was at 2 o'clock, I would absolutely, do something like I see this low, we're kind of pushing higher, we're going up here. I would maybe like put in a low right here because I know we usually like taking lows again. The market is so brutal. It's not new to me. So, but going lower than this, 0.786 retracement would be really, really aggressive. So this is really good risk for me right here. And I would absolutely target at least this fair value gap to see what's going on. But in reality, I would love a runner to be up on this wick here, right? Because, this fair value gap kind of got disrespected, so I don't really care about it anymore. Same with this one. But if this bearish fair value gap doesn't hold, then we can continue our trade even longer, right? So I'm basically just going to be targeting above this, waiting for this to either be valid or invalid, and then going off of that. And so basically, now at this point, we can see, we retraced like we wanted. We're still waiting, we're probably not looking at the charts at this time, but because there was so much to go over, I might as well just continue from this point on and see what happens to see if this trade really was valid. And so what I can see here is that this fair value gap is holding, right? It's holding. But at the same time, I want to make sure that we're still pushing higher. We are still pushing higher. There's nothing to tell me we're going to retrace back down lower. So even though there's not any, perfect fair value gaps, again, this is why you don't trade during lunch hour, because there's not going to be beautiful fair value gaps in your face, just waiting to be validated versus when everybody is trading at the same time. I mean, you could use this 5 minute fair value gap, but again, it's not my forte. It's not in my comfort zone really, but everyone's different. So I just want to show you these opportunities that I'm seeing. And as soon as this gets broken, it's pretty much going to take my take profit, whether I wanted to scooch it up or not. I think this is pretty good risk, pretty good reward. If you're trying to go for this kind of thing, I think you're a little bit too hungry. So yeah, that's pretty much it with that particular trade. And I want to see what happens after this, because it's probably going to push up higher, but there's no reason to be extremely hungry. Unless, of course, you're the type of trader that, you can layer in your trades. Like you have this one go well, so you're going to put in a runner, let's say like right here, probably have your risk down at that bottom, and then now you can set a runner up to the stars, right? This is a more valid layered contract trade. And of course, keeping up with the price action, making sure nothing gets invalidated, making sure these big drops aren't, scary. We're going to go the 5 minute again. We're going to look for some fair value gaps. I'm going to get rid of this first one because it worked. This is now kind of an inverse, so I can use this as an inverse fair value gap to continue my trades. That's kind of what I like using inverses for, is during my trades to see if the other bias one gets disrespected, that I can continue on setting this now as my risk, right? I can adjust my risk as I go, making sure my trades last longer. This gets invalidated too, so if anything, I'm just really not scared now to have that runner up there. I don't do layered contracts still because I don't have that much experience or that much capital. But when I do, I'm glad I'm practicing stuff like this, because it won't even feel like something I have to learn all over again, right? So this is bad news. I would not like to see that if this doesn't hold. Now my risk is absolutely right here. So we're just going to see if it goes below that risk, and it does. So we would just take this much profit. Unfortunately, we don't hit our runner, but that's okay. That's the very first time I would even try having a runner. So for the first time, it's not terrible. Right. But guess what? Now we're at 2 o'clock. So what action are we looking for? What are we waiting to see? Right. We thought we were bullish. We thought we were coming back bullish, and we kind of got stopped. Right. Something happened, and that's not the best thing to see. So volume is back in. We want to look for our fair value gaps. We want to see what's up. Higher time frame first. This retracement is not needed anymore. Our SMTs were very nice to see, but we got to look for new ones now. And here is one actually right here. So for some reason, that's actually in the future. No spoilers, right? So yeah, we are still in sync at this point. The 5 minute is a lot easier to see. Well, the 15 minute we got to see we're still trending up, right? And we are kind of trending up. What really depends on is where that low is placed, because I would assume this is kind of an equal high situation, right? Because we're leaving buy side on purpose, right? The market's not doing that on accident. So if we are still going above this low, then that's a good opportunity to take a long during power hour. And at this point, I'm not even going over the trades I did, because we already went over 1 o'clock time frame, and I took one at 101, 104, both longs, right? At least with the 104 lasting 9 minutes, I took as much profit as I could when I saw the trade going sideways. So 104 to 113, right? So this is getting ready to drop down. So at least I took some profit on that one. And then the 101 didn't even work out because, yeah, it was just still retracing downwards. I don't know what I was even thinking there. The review I was just making is a lot more plausible, a lot more sensible. This is when I should be taking a trade, not up here, not over here, right? The time to trade is over. So, and then 2 o'clock comes around, I make a 2 o'clock trade, just lose, get stopped out immediately, probably because I'm chasing the trend right here. Exactly. This is a moment where we need to step back and say, hold up, we shouldn't be going down this much because of what? Because of our inverse fair value gap. Our inverse fair value gap was helping us out until it wasn't, right? So that's when you need to take a moment and say, hold on, we need to reassess what's happening, right? These were our inverses. And this one is, the one that was more important, because this was really validating my trade to go up to the runner. So as soon as this gets broken, I'm going to be suspicious. So there's no reason to take a 2 o'clock long, right? That's the point. So now what we're waiting for is, again, we have kind of equal highs set up there for a reason. We're kind of going to wait for some kind of indication that it's time to get back in a long. So I'm going to take a pause again, draw some stuff, save some time, and show you when a good entry would be. All right, so we charted just a little bit more. We are definitely in the heart of power hour. As you can tell, we drew a retracement again, because if we're really going to chase those equal highs, I expect us to go into discount at least. As you can tell, the fair value gap that wasn't even in discount already ran through. We drew in our bearish fair value gaps, including a 5-minute just for experimentation. And there was no fair value gaps on the 15-minute, but there was one on the 5-minute. And there was really none on the 1-minute either, besides the one I just deleted. There was a 5-minute here, but again, just disrespected, not in discount, doesn't matter. Right, this one does hold. So this could be, there's no SMT. If there was an SMT here, I would really have no problem trading this. But because we're kind of iffy with that high not being taken, because, because we already had a really good long setup, I would be a little more suspicious of this long. But if you really wanted to take it, I wouldn't, say that you're stupid. It's still a completely valid trade. You could put it in from the 0.618 level down over to the 0.786 level. It should really not be going lower than this, especially if this fair value gap already held. And then again, you can just target your high right here. It's a pretty good risk to reward. Again, watch the action. Make sure you're not staying in a trade that's going sideways. No SMT so far, so let's just see how this long would go if we, thought it had any merit to it. All right, so we are pushing higher. We are pushing higher. That's very good news. Very good news. And then, okay, yeah, we're looking good. Looking very good. This gets disrespected, so now I'm basically saying this is an inverse. Same with this one. Basically an inverse. This is really the only last hope they have to stopping us, which it does work a little bit. But again, we're going to rely on this one now. Our risk is probably set to this right here, because if I did here, we could get stopped out. We'll see. Yep, it did. Okay, so either one would be okay, because this is why you want to move your risk, because you could still make money on this trade if you had put it here, right? You could still make 11 points, and you could have still made some money even if you had a even more riskier risk placement. Either way, you should not be breaking even. You should definitely be grabbing some money. You should be getting something out of this, right? And at the same time, if you were really suspicious of this fair value gap, right? If you were like, if you're more in tune with the retracements, you would say, oh, we have really high chance of retracing down here, right? So you could even instead set your take profit to the middle of this fair value gap, and that is essentially guaranteeing you less profit, but a much higher win rate. So again, it's just all depending on your style of trading. But no matter the style, whether you like to hit that top while managing your risk, or you like hitting a very safe take profit while keeping a break-even risk, you should definitely be walking away with something from this long, right? And that's exactly what I didn't do at 2 o'clock, because 249 was my trade, and I'm taking shorts at this point. We're not even there yet, right? This is basically our last long opportunity before something unexpected happens. So we're going to get rid of this now. We don't know why this happened. All I can tell you is that these inverses are no longer useful, and this fair value gap is going to mean something, right? So if we break lower than here and we start to retrace, now it's time to take a short, right? Because again, we have a high, a lower high, right? Here's our low. Here's our low, but in the meantime, we're hitting a low here and a lower high. So if we go lower than that, now we can look for shorts, right? And that's kind of what I was leaning towards here. But of course, I did not take a good entry. I probably did some things wrong. So we're going to see that very soon. But that was absolutely our last opportunity for long. Depending on your style, you could have walked away with something, or at least a little bit. All right, so let's see what happens here. All right, we do push lower. Again, now I'm in the mindset of shorts. We're going to look for what kind of short can we take. We're going to look for something like this, get our fair value gaps down. Boom, boom, boom. Probably retracement, get some more confidence in where we should bounce, right? Probably somewhere in this area. This fair value gap would be looking very good to me. Oh, okay, then never mind, right? So we're we're gonna push down even lower. The only reason why I'm not even thinking about taking a trade like this is because I feel like the less experience I have is the more I'm rushing into a trade without enough confluence. So although we are hitting that lower low in this lower high, this is still a lower probability trade, because again, we're not hitting discount. right? This is an aggressive trade to take. And again, you don't know where to set your low, right? Because let's say you want to take this trade that badly, right? Where are you going to put your risk? Above this fair value gap? That's a lot of risk, right? 13 points. So I better be taking 39 at least. So where's 39? I'm basically have to go below that low that was already there. So I think this is kind of a trade for the very experienced, because even in my experience, I think that I'm missing something here, you know? Maybe if I look again, I could see something, and I do see it. Um, no, that's equal highs. I was going to say I might see an SMT here, but, I don't like SMTs that aren't very clear. These are just equal highs, which would give me even less confidence in taking a short in this moment, because equal highs and lows really get chased in aggressive ways. So although this trade would have worked out, it's not one that makes too much sense to me. And again, I actually hit it like by the tick, which is kind of crazy. So yeah, kind of a lucky short place there. But if you took that trade, congrats. So let's see what happens here, right? So now we're tracing into discount. This is when I want to take a short, and this is actually why my trades are so bad, because I took a trade at 249, 252, right? So where's 249? Right here. I was definitely trying to trade this fair value gap, not even in discount. Terrible idea. Absolutely disrespected. That was an easy one to see. 252. This was when I was completely tilted, and I got so lucky, because now that I'm doing this again, I see absolutely when I should be taking this trade. It should be right here, placing my risk right above here. This is a very easy trade to see, targeting now a low that is defined for me, right? Boom. That's even pretty aggressive. I'd probably just go for this, right? That's easy money. But guess what? I got in at 252. So my real trade was right around here in this fair value gap. The fair value gap that I should not have been trusting versus a discount. So what happened is my account got so close to stopping out that it was really just luck. And I didn't even cash out when I was plus 700, because guess what? I was chasing lows. I was chasing equal lows instead of just taking a safe take profit, walking away with a positive day, and being a loser. Because the rest of the day I was just trading close to close, which is, I'm not going to even review that because that is a joke, right? So let's see what happens here if I took the trade the right way. Boom, right? This is the way you make money. Not by being tilted, not by revenge trading. It's by doing your homework, right? So let's look at the 5-minute here, because now I want to watch price action closely, make sure that we're not getting things disrespected. This is holding, right? So this also doesn't matter to me anymore, but this one does, because our bullish getting ran through is a nice inverse for us to work with, right? So we're going to write here IVFG. I know this video is going a little longer than I want, but I'm really breaking down every single trade you could take today and every one I shouldn't have taken today. So if you think this video is long, I'm sorry, but you're getting lessons by the minute. So, I don't know what more to tell you. The inverse does hold. This one doesn't even matter. I would definitely have my risk. As soon as we're going down here, I don't want anything going above here. So I want to walk away with something, right? So what happens? We're still doing good. We're still doing good. I would want to put my risk down here now, but I think we need to push a little lower. We're almost there. Sorry, let me extend this. We're almost there, and yeah, something bad happens, right? So once we're down here and we're getting kind of choppy, that's a good time to place the risk here, right? Because then you can walk away with something, and if things don't go your way, then that's all right. And that's what I didn't do here, because I had that 252 for 50 minutes, so basically 341 is when I got out of the trade, which is right here, 341. It was probably because I had my risk up here instead. So, as much as it sucks, at least I can look at this a second time, find a much better time to get in the trade, and still have good risk, still walk away with profit. And yeah, that just doesn't work, right? So that's why we're not going to put our risk all the way up here. We're going to adjust it after we see some choppy action. And that's really it, because now we're in market close. There's no more trades to take, right? So our trade ended right here pretty much. Walked away with something, 9 points, no risk essentially. That's as good as it gets, guys. So that's really all I have for you in this video. I'm sorry I went over 30 minutes again like usual, but I really tried to cut it down as much as I could in terms of time, and I feel like you got you guys would have gone a lesson by the minute here because there was so much action, even though it was a no news Monday. Like, even no news Mondays can be good days to trade. So I don't know about people's mentality with trading on news days, no news days. I think every day is a good opportunity to trade if you're doing things like this, right? Not one particular thing should decide if you're trading or not. Of course, it can decide if you don't trade in that minute, like with the 8:30 red folder news. You definitely don't want to be taking a trade there because it's usually just wicking up and down ridiculous. But even on a no news Monday, there's plenty of opportunities here. You can at least learn. You can at least chart. You can do something, right? So I hope you guys learned something in this video. Again, the next videos will be on the next following days, which are all positive. So stay tuned.